Are you patiently waiting on the sidelines for prices to come down? Zillow dropped a report this last week saying that price cuts are on their way as inventory is piling up. I'll dive into this report from Zillow and share with you what's really happening in the market, so stay tuned. San Diego numbers are shifting. Does this mean prices are coming down? Maybe. After sharing with you the Zillow report, I'll dive into the San Diego market and share with you how the market is moving and where the opportunity lies. To wrap this up, rates have come down some. Will they come down more though? I'll share with you what will happen this September with rates and what has to happen for the rate cut to actually take place. This all covered here in this week's San Diego Market Matters. I'm Karl Kyler, your San Diego Realtor. Let's jump into it. Real quick, if you find these videos of me nerding out about the real estate market helpful to you and your journey to learning more about San Diego and the real estate market here, consider subscribing to the channel and liking this video. Your support to the channel costs you nothing, and as a thank you, here's a cute pic of my pups. And real quick, if you're thinking of selling or buying here in San Diego, there's a link in the description below where you can schedule a meeting with me so we can discuss your goals and how I can help you achieve them. But if that seems a little annoying, you can call me directly. Now, on to the good stuff. Zillow's latest headline is quite the attention grabber. Price cuts abound as home sellers see inventory piling up. Piling up? Really, Zillow? On the surface, it sounds alarming, and for many potential buyers and sellers, this kind of news can create a lot of uncertainty and even panic. However, it's important to dig deeper and understand the full context before jumping to conclusions. First, let's talk about what Zillow is seeing nationally. The report highlights a trend where more sellers are reducing their asking prices, suggesting that demand is weakening and that prices will follow suit. This certainly could be true in some markets. For example, parts of Florida, maybe even Boise, Idaho, to name a couple. Zillow further suggests that these price cuts are coming because the home shopping season has peaked sooner than normal. Maybe accurate. And more inventory continues to come to the market. True. Zillow cites a 4% increase in inventory between May and June and a 23% increase in inventory from last year's low nationally. Okay, 23% increase in inventory may sound like a lot, but this data is written without context. Let me give you an example of how important context is. Today, I ate 200% more Oreos than I did yesterday. Actually, let's make that 300%. Now the question is, how many Oreos did I eat yesterday? Well, I only ate one, so today that means I ate 3. Is that really that many? This is no different than when you see doomsday gurus on YouTube that say foreclosures are up 300% from last year, and that's an obvious sign the market is crashing. You have to ask, how many foreclosures did we have last year before you assume anything? Context. When Zillow is saying that inventory is up 23% from last year, keep in mind that last year was one of the lowest inventory years in recorded history. We are still 33% below pre-pandemic averages, which thankfully Zillow does cite, but not till afterwards. Is inventory up? Yes. Are price cuts happening? Yes. What is not noted in the report is that many price cuts are simply correcting over-ambitious sellers on the initial list price rather than indicating a broader market downturn. Sellers are becoming more realistic about their pricing after considering current mortgage rates, prices, and an increase in inventory in our markets. However, it's crucial to remember that real estate is hyper-local. While national trends give us a general idea, they don't always reflect what's happening in specific markets like us here in San Diego. Here in San Diego, our numbers are showing up in a really interesting way. It's something I suggest that would happen in past San Diego Market Matters videos, but it's happening slightly sooner than expected. Let's put it in perspective and dive into the numbers for the San Diego market. Even with these price adjustments, the median home price in San Diego still remains strong. You can see in this graph that the median home price here in San Diego has only gone up this year. And this is despite elevated interest rates, which is something I'll touch on at the end of this video, so stick around for that. We are seeing homes stay on the market a bit longer in some instances, but overall, our average market time is still less than 30 days. I have clients regularly ask me if they can submit an offer below asking price because the home has been on the market for 20 days or more. Now, you're always welcome to submit an offer at whatever price you want. Just keep in mind though, a seller won't be as likely to do a price adjustment or accept an offer below asking until 50 to 60 days on market at least. This slightly longer market time also suggests that buyers are being more cautious before making an offer, but they're still very much in the game, particularly as interest rates are showing more hope. So market time is slightly up. What's happening with our inventory? Inventory is up as well, but more significantly. To do a quick recap, November of 2022, we were barely over 4,000 homes on the market, which by the way is still really low. Since then, we have struggled to get over 4,000 homes in our inventory until April of this year. Since April, our inventory has only continued to grow and grow significantly, about 25% increase since March of this year. That may sound like a lot, but keep in mind, we had a really low inventory year last year. Think back to the Oreo example I gave you earlier. This growth would not be classified as piling up like Zillow describes it. Rather, the increase in inventory is creating a more buyer-friendly market. What does buyer-friendly market mean? What it doesn't mean is that buyers have all the negotiating power and prices are coming down. That's a buyer's market. A buyer-friendly market in this case is a market where buyers have more options to choose from and some negotiating power. We're starting to see a comparable environment for buyers and sellers to the times before the pandemic, where demand is still high enough to sustain prices and price growth, but it's not so out of control that all the negotiating power lies in the hands of the sellers only and prices continue to climb like crazy. The reason this is happening is because the number of new listings coming to market picked up earlier this year, and at the same time, the number of homes accepting offers did not pick up at the same rate. So inventory is up while sales trail behind. So what does this mean for you as a buyer or seller in San Diego? For sellers, it's crucial to price your home competitively from the start. When price is used as a market strategy, you get two benefits. First, an increased likelihood of multiple offers to bid up your price and better terms. Second, a shorter time on market before receiving offers. For buyers, this period of stabilization can actually be beneficial. It means fewer bidding wars and more opportunities to find a home that fits your needs and budget without the pressure of skyrocketing prices. To wrap things up, interest rates are still sitting below 7%, which is amazing. And due to the recent unemployment reports, the Consumer Price Index and the Personal Consumption Expenditures Index, all metrics that the Federal Reserve uses to measure inflation, traders are betting a 100% chance that the Federal Reserve, old Jay Powell, will issue a rate drop come September. The expectations are as such: a 93% chance the Feds will cut the Fed funds rate by 1/4 point, and a 6.7% chance the Feds will cut by 1/2 point. For this to really happen, we need two things to take place in August. First, we need the unemployment rate, which is at 4.1%, to go up. In addition, the Personal Consumption Expenditures Index, the PCE, that needs to come in lower than it did the month prior. If both these metrics deliver, the Federal Reserve will have likely accomplished hitting their dual mandate of lowering inflation to 2% while maximizing the labor market, at which point they can lower rates to support controlled growth of the economy going forward. Now that's a wrap for this week's San Diego Market Matters video. If you found this information valuable, be sure to hit the like button and subscribe to my channel for weekly updates on the San Diego real estate market. Now, are you looking for a way to save hundreds of thousands of dollars on your mortgage and pay your mortgage off early? If that's the case, check out my 7 strategies video that should pop up right here at the end. Lastly, if you're considering buying or selling property here in San Diego, don't hesitate to reach out to me for expert advice tailored to your needs. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you in the next video.